I'm Greg Hunter. Welcome to USAWatchdog.com. I'm really smiling today because a lot of people have been asking for this next guest, and I thought, wow, good idea. And he's fun to listen to. He's one of two people that got this right at the beginning of 2020, and he got the markets 100% on the money. He said, "quote I'm more worried about a 40% drop than a 5% increase." After he said that, and he said his clients were out of the market. And after he said that, I think the markets rose a couple of percent, and it went down 38%. And so, ding, 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 right on the money. And he's back, and he's one of the top geopolitical and economic cycle guys in the world. And I'm happy to have him on. I'm excited. Charles Nenner. Charles Nenner, how you doing? And thanks for coming back on USAWatchdog.com.
I'm doing fine, and we have a lot to talk about.
Well, you said in the pre-interview, you said, yes, we got the markets right. You got your people out of the market. You clearly said, my people are out. I told them to get out, get out, get out. And so, and there was good reason because it was pretty ugly, as your cycles were showing you, and as you said on the air in the end of January. So, but you said, wow, we made more money in the gold market. So, tell me about the gold. Let's start with the gold market.
Well, as you remember, we know each other for a long time, but I don't know how long. We went long gold, I think October, November 2011, if I'm right, and the price tag was 2,500. And so we went out just around 2,100, and the price target was 1,850. We hit 1,850 a couple of days ago. So we bought back, and we play this long-term gold market. And for 150, 200 points, we'll go in and out because it's worthwhile. So the cycle is up for much longer. 2,500 is the first target. It could be that we get higher targets. And since I don't really believe in the stock market, we talk about it in a minute, most of the markets that we follow and do very nicely in is the gold silver market, the crude market, the bond market, the dollar. It's all very simple and normal. And this stock market is not going to end very well.
Well, let's talk about the stock market. And you said 2011, so you were long gold up to 2011? Is that right?
No. We started in 2011, I think around 1,200 something. And then every time that there's a correction of 150 points at least, then we go out and we buy it back.
Oh, so you've been, in other words, it goes up, down, and it goes up, and then you sell.
So last time we went out just below 2,100, and we bought back around 1,850, which was the downside price target a couple of days ago.
And you think that I guess the physical commodities market, gold, silver, oil, wheat, rhodium, whatever, that's where you're focusing like a laser, not the stock market. Let's get that first.
Well, we also do stock market, but I try to teach people because there are a lot of new investors these days who still don't know really how to behave in markets. And I tell them it's much easier to do the other markets. We're also doing the stock markets. Like I said, we talk about the situation in a couple of minutes. But you don't always have to make your money in the stock market. You have to educate yourself a little bit. And if you're afraid of future markets, there are always ETFs to go long or short in crude and in bonds and in the euro and the dollar. There's so much to do. And for a while already, the S&P doesn't do much. We went out just around 3,600, and we just bought back last Monday. Actually, that's yesterday. I think there's going to be an up move into the end of November. But it's going to be selective, and I'm afraid everybody who's putting all his money, taking a loan against his house to continue to buy calls, the call buying is exceptional among small traders. And I try to teach them, you don't have to make the money in the stock market. And then the answer usually is, I don't know anything about the gold market. And then my answer usually is, what do you know about the stock market? I mean, you can listen to the media, but if you would ask the CNBC or the journalist, you think the first 10% is up or down, they wouldn't know. So you also don't know about the stock market. It's just an illusion.
So near term, you think the stock market's going to be on the rise going into the election. Why?
I have no clue. My system is that it shows what's going to happen. And the same thing happened when this market came down. We talked about the black swan situation. I said, instead of looking what the black swan situation is going to be, black swan means that the guy who wrote the book says something's going to happen, but we can't figure out what. Stop figuring out what and try to figure out when. and by that time you already will see what will happen. But again, everybody's conditions to understand why. Economists are being taught why and not when. So we do the work when, and we see later why it happens.
Do you think? I don't know if you know. I don't know if you want to get into political calling. Do you think Donald Trump is going to be elected president? You think that might have something to do with it, or do you have? Are you just a political atheist and you don't?
No, no, absolutely not an atheist. I just get so crazy that
A political atheist, not an atheist, but
yeah, politically. So, looking at the stock market, then we have to assume that Trump is going to win.
So that's what you think the market's already signaling that Trump's going to win. That's why you're seeing the steady like this. Wow. Yeah. That's your best guess on that. But overall, then you said I don't really believe in the stock market. Then let's expand that longer term. What about the longer term for the stock market? You think it's going to go up to November, and then what about after that? Why don't you like the stock market?
Well, as you know, the stock market is still very overvalued, and one of the indicators we follow is what's called the Buffett Indicator. You're probably familiar with that. And that looks at the whole capitalization of the stock market compared to the GDP, and it's extreme. I think it's more extreme than in 2000 at the bubble. So if you put emotions aside, you have to buy low and sell high, but then you have to have indicators that tell you what is low and what is high. So for me, this is high, based also on fundamentals. But based on the cycles, we can try to test the highs one more time. But then it's not going to end well, because then everybody will try and get into the market. And then the whole thing is over. I already see now that there is a lot of distribution going on by the big institutions. So you would ask me, how do you know there's a distribution going on? Let me give you an example. If an institution has 500 million in IBM, and they want to sell IBM, and IBM is at 100. If they sell a lot in the market, then IBM goes down, so they can't get out of it. So what they do is they sell, and then they buy 10,000, 15,000 shares best, so at market, so it shoots up, and then they sell 100,000 again, and they buy 10,000 again to get the price up. And I follow all these things. So that's how you see there is distribution going on. And when they're finished selling, that might be the reason that the market goes up one more time, and then the small investor is holding the bag.
And you have, and we've been on this ground before, but I want you to kind of explain it and the way it looks now. And that is, you can probably lean back just a little bit in your chair. Go ahead and lean back. There. There you go. There you go. Good. Because you were just a little you're cutting off the top of your head. But anyway.
I like to lean back. That's good.
Okay, good. Not criticizing you. I just want you to look, perfect, because, you're a beautiful guy. But you said in the past, and how does this play into your scenario? We think, it's going to go down to 5,000, and a lot of people have ridiculed you for this. Other people have said it's going to go down to 5,000 or 6,000 as well. Other people don't think it's good. Martin Armstrong says, the problem with the market is everybody got the same thing, and when everybody wants to sell, the whole thing's going to just crumble. You need to be in, and he's talking about you need to be in other commodities, soft commodities, and gold and silver and oil, and you need to be in other things, not just everybody's got the same basket of stuff in their stock portfolio. So back to you. You say you don't like the stock market, and you've said in the past it's going to 5,000. Is that changing, and why or why not?
It's not changing, and a couple of years ago it sounds very crazy, but if this virus situation gets worse, and I think it's getting worse, we talked about it, and they're not going to get under control, that could be a very normal reason this thing goes to 5,000, because everything till now is an illusion. I don't understand the attitude of people, but soon it's going to be much worse because the winter is coming. And I understand from my colleagues that I know from medicine, because I'm a medical doctor, that there seems to be mutation going on in the virus, and this is going to be a big problem. And when cycles turn down, then everybody realizes what's going on. As long as cycles turn up, they say, well, it's not so bad. So the interpretation is positive on what's ever going to happen, but the facts stay the same. But when the cycle turns down, then the market's coming down.
And and over in Europe, they're having a big. You're over in Amsterdam, Holland, right? Over in that neck of the woods, and so they're having a big resurgence in Europe, right? I mean, they want to have a new lockdown in the UK, and they're wanting to go after Boris Johnson's powers to lock everything down, and they're having protests, and so so the virus is getting worse in your neck of the woods. Is that what you're saying? That's just
Well, you don't even have a second wave because the United States is still in the first wave. Of course, everybody runs behind the facts, and politically it's very interesting because no country is happy with its government because no government can control it, and they all blame the government, but nobody says how they should do it. Also United States, Biden says Trump doesn't do it correctly, but nobody says how he should do it. So all the governments are getting a hard time and might get in trouble because nobody can control the situation.
and that's part of, you think, the scenario for how we get to Dow 5,000 if this keeps dragging on.
No. I don't know. I don't know. Anything can happen. I just bring something up that a couple of years ago it seemed very unlikely, and now if the virus gets very bad, you think, well, it's a possibility. Something else could happen that we don't know yet.
And that all your charts are pointing to the same thing. What do you think about Armstrong saying everybody's got the same thing in the stock market? You got an aging population. When everybody wants to sell, it's gonna be a disaster.
Well, it was the same. It was the same. Maybe remember, we went out in the early 2018. At that time, it was because maybe you remember that I said every year that ends with a 7 ends a bull move, and we talked about 67, 77, 87, of course, 97, 2007. Everybody knows, and then it was 2017. And the end we said going out, and I asked people why in the market. I never heard it. And then we went out before this crash of 40%. Nobody knew to tell me why they were in the market. And the same thing now. I ask people why in the market. I don't get one normal answer. I let me take out the word normal. I don't get any answers just because it's going up. Well, we've seen that before. Like I said, you want to sell high, but you have to know when it's high. So for this, you need the mathematics and the neural networks that I developed, and then we decide what's high.
What do you think? What do you think the high watermark is on this market? If you think it goes to the end of November, what's high?
I think, well, maybe we just get back to the highs.
29, 30,000 on the Dow.
Yeah. And then probably we'll see that the momentum is slowing down and all kinds of technicals are breaking down. And then, the thing goes.
Do you think we'll reach a new all-time high?
Well, I don't think it's going to be close. Maybe a couple of points. It's not. Maybe you remember. I maybe you don't remember. I sent out at the beginning of last year and this year an S&P chart, a yearly chart. A yearly chart is a chart where every bar is 1 year, and there's a perfect parallel channel that you create if you connect all the bottoms and all the tops. And the top is like 3,500 plus minus yearly close for this year. And then I wrote, I've never seen a market that has a 10-year or 12-year channel and then breaks out on the upside. It's very unlikely. It can happen one time, but we cannot work with things that almost never happened or have never happened before. So then when I was there a couple of months ago, is everybody out because we're at the top again. So now if we that lucky that we hit the top of the channel again, then it's a very simple trade to go short or to buy the VIX like we usually do.
And I want to revisit this just because we know the debates are here, and Biden and Trump, and it couldn't be any more stark different choice. I mean, one guy's going to raise your taxes and the other guy's not, and it's one guy's is for no rights for you and Green New Deal, and the other guy's for I'm getting out of all that junk that's going to destroy us. But you think the market is going up now, and it's been so resilient because the market is seeing a Trump victory. Could you talk about that a little bit?
No, I can't talk about it because usually the market is right. Until now, it's not really selling off. So maybe the market knows something we don't know.
So you don't have an opinion on that. Let's go back to the okay. But you think after November, it's going to be tough sledding in the rest of 2020 and 21.
Correct.
Oh,
in 2022, that was my long-term low.
So the next 2 years is going to be rough sledding. You're going to be selling the dip, right? And buying the spike and selling the dip, right? Or wait, but selling the spike and buying the dip.
Yep.
You'll be doing the back. You'll be doing the total polar opposite of what's been happened. You'll be buying the spike. You'll be selling the spike. I'm sorry, selling the spike and buying the dip.
Right. So over here, the cycle is bottoming. So like yesterday, we had a buy signal for the first time in months, and we'll see how far it goes. But it seems to be up until late November.
And then after that, a couple tough years. Now, what about the commodities? Yeah. Is that the same for the commodities?
No, they have different cycles. They have different cycles. You see, we talked about the dollar. You asked me, is the dollar going to collapse? I said, no, the dollar's not going to collapse, and it didn't collapse. Now we have a cycle that brings the dollar a little bit down. The crude oil is up, if you want to know exactly, until October 22nd. So they all have different cycles.
And crude's going to stay strong for
until
now.
Until the third week of October.
And then what do you like? How do you like crude? Is that going to be a long-term up? Is that going to be going up or down in the next couple of years with the stock market?
No, it's going to go down because I still think we're going to go in deflation, and which makes sense. And that's one of the reasons why gold is up. People don't understand that. They always look for inflation for gold to go up. And then I showed them historically, most of the bull markets in gold are in deflationary periods, not inflationary periods, because you have deflation, there's nowhere to hide, and it's very cheap to hold gold, and you're afraid for the financial system, so that's why gold goes up.
And people talk about deflation. It's debt destruction. It's not prices going down. It's debt destruction. It's bond destruction. It's oh, you had a restaurant. We're not paying that lease now, that 2-year lease or 3-year lease.
Right.
Right? I mean, explain that. Explain what deflation is. It's, oh, we had a mortgage. Yeah, we're not paying it anymore. Oh, right. We had a bond. Yeah, we're not paying that anymore either. So explain deflation to everybody and why gold goes up in deflation. Start with what is deflation? Why is gold going to go up?
Let's start with the stocks. If I am General Motors and I'm going to make a car and prices go down, then it could be that by the time I finish the car is less than what I made it for. So I have to fire people. And if I fire a lot of people, then they don't have buying power. So they buy less. The second thing is, if you have a financial crisis or people don't trust each other anymore, like they did in Europe, in Greece and Italy, then the rates, they shoot up, which brings the bond market down. And one of the problems in the bond market is that we had to have a bull market of 30 years. And brokers and people don't even know what it means to be in a bear market of bonds because honestly, there's more market in bond markets than in stock markets. So that will be very bad. Now look what happened in real estate. You thought you're safe in real estate, but companies are not moles renting, but they don't pay the rent anymore, or they negotiate and they're not going to pay anymore. So that's also not a safe place. So there's not much left. So people go into gold and store it away. For the worst case scenario, even, be sure if banks don't survive, they have the gold.
Very good. Very good. And you think real estate is not the psychedelic shack, not where it's at. You think real estate's a bad play at the moment? I'm not clairvoyant, but I would say if people lose their jobs and interest rates have to go up, not because the economy is strong, but because we don't trust each other. So if I want to get a loan, you have to pay more because the bank says, listen, this is too risky and interest rate has to go up. Although the Fed keeps it low, it doesn't help much. So I don't see how this can continue, especially with the shopping centers. And I don't know, in Europe, a lot of industries going out of business and emptiness of office space, especially now because people work from home. And they have everything invested in there, so that's a big problem for big investors. Yeah, the REITs and all that stuff. Get a REIT. They're talking about here in America. They're suing over this moratorium on paying rents, and they say, hey, it's unconstitutional. And Martin Armstrong brought this up, saying they're scared out of their mind. He consults over there in Europe and says they're scared out of their mind. They know it's going to end. It has to end. They can't keep hanging this on the mortgage on the landlords, on the property owners. Same thing over here. They're suing. They're saying this is unconstitutional. You can't just by edict tell people to stop paying me in a contract. And they're going to win. And so you're saying we haven't really seen the next wave, the next economic wave. Is that part of what you're seeing in a downturn, the next economic wave? Why you're talking about this severe
Well,
deflation?
take a look. I'm in Amsterdam. We got KLM Air France. I think they poured in $3 billion, and still things are very bad. How many billions of dollars can they move in there? So they're already almost deciding we're not going to put in more money. So all these $1 billion are lost. And the funny thing is, and I explained it to a couple of people, sometimes investors look at book value. The book value is if a company would sell all the assets they have, that's at least the minimum value they have. So you have all these planes, but nobody wants to take the planes anymore out of your hands. So the book value doesn't mean anything. So today, in this crazy situation, you cannot even rely on book value.
And thus, people can rely on the one thing that's 6,000 year track record, and that's gold.
Right. But again, I would like them to look what we are doing, because it's very volatile. And I have had people who say, I don't care, I'm there in for the big move. But then it goes down $100. And then it says, well, I'm there for the big move. And then it goes 200. By $300, they sell out because it's too much. I thought you were in there for the long run. Well, it's too much. And then I go in, and then afraid to go in, and I miss the whole move again. So it's really a matter of exact timing with gold and silver and gold stocks. You know, gold stocks give still a nice dividend. So what you can do is, if you know enough about it, when my cycle bottoms, you can buy gold stocks. You get a couple % dividend. You can sell an in-the-money call against it. It will give you 15-20% a year if you do it the right way.
Huh? How do you like? I know people are sitting there going, "Ask him about silver. Ask him about silver." Okay, what about silver? What about silver? We had it going up, to, I don't know, $28, $29 an ounce. The commissions on the coins were going crazy. They were, for $10 over spot, $11, $12 over spot. Then it's come way back down to 22, 23, but you still got $6, $7 commission. You still cost you $30 to get a silver eagle. What about silver?
Well, we had a price target of 2270 to 2280 on the downside. So we covered all the shorts. A good buy signal is going to be giving, if it closes for the December contract, above 25.5. And the same thing as gold. I think soon is going to continue up. Now, it has to catch up with gold, because, the high on silver a couple of times was $50, and it's only half of it.
Yeah. So you think silver is a better deal?
For the moment, I think it's a better deal. Yeah.
Huh. And where do you think silver is going to go? You think gold is going to go up, and I'll get back to your price target on gold, where you think it will ultimately settle out. But where do you think silver's going to go? It'll reach new all-time highs, 50 again, for sure?
Not for sure. I didn't calculate it, to be honest, because I mostly deal with gold. I don't like to invest and trade the silver market. There's too much of manipulation, so I stay with the gold market.
Oh. But you think it'll follow gold?
Yeah, it must, because if you look at the gold-silver ratio, silver has to make a bounce because it's too far away from the gold price.
Ah, okay. And then where do you think ultimately gold's going to go? Where should it go to in this environment? And
well, for almost 10 years, we have a price target of 2,500.
Right.
My problem was it's still up for a couple of years. I said when we were at 2,100, we probably go higher because we still have a couple of years to go. But then it came down, and it takes time. We see when we get to 2,500 how much time is left until the cycle turns, and if I got higher price targets. But that's for the moment what we're looking at.
And how long do you think the gold cycle is going to go on for in your charting, in your cycle work?
A couple of years.
Okay.
You'll be surprised. A couple of years, yeah.
Wow. So it's so even if you did nothing but buy at some point where it drops off and just sit it and forget about it, you would do okay there as well.
Yeah, especially if you buy the gold stocks, you get a couple percentage dividend also.
And is it because of the more they're talking about more money printing? I mean, the Democrats have a $2.5 trillion plan on the table. The Republicans, as fiscal conservatives as they are, they only want to spend another $1.5 trillion. So is that the same thing going on in Europe? The money printing, everybody is printing currency to try to save their bacon.
Yeah, because it's only short term. I think we once talked about it that if you let's say in Holland, they have one of the biggest pension funds in the world together with Norway, and if you work here, then you have to give a percentage to your to your boss, and he puts it in the in the IRS for your pension. But these funds over here, they buy bonds that give you 0%. And I've been talking about this on television. I says, how come nobody's outcrying? What is this nonsense? That you give your money for 30, 40 years and they put it in bonds that only give 0%. So you must understand that soon there's no buying power because it's an older population over here. The same thing happened in Japan because there was an explosion of children after World War II. And we're all 60, 70 years old now. And if nobody has a pension, then the big population doesn't have any buying power. So you can just count on one hand that the whole thing is going to collapse.
Thus your deflation scenario.
Yeah.
It's just all the different components of the deflation scenario are going on.
So they have all kinds of tricks to keep it going as long as they can. And I wrote an article. I said, listen, if it would be so simple that the interest rates are low, the Fed keeps it low, and the stock market goes to the roof, then we should always do that. Then everybody's rich. But of course, it doesn't work like that.
Yeah. And I don't mean to keep, but I'm seeing a consensus, between you and other guests. Martin Armstrong says, I've consulted over in Europe, and they want to have permanent bonds for these bonds, and they'll pay the interest. Well, could you imagine having this $15 trillion and you getting a letter saying, hey, we've turned your bond into a permanent bond. We'll pay you the interest at 0%.
Yeah, but the funny thing is, the difference between U.S. and take the Netherlands again, because I'm familiar with that, is now they want to have $50 billion because they have to support all the businesses. And it seems to be no problem to sell it to the population and ask people, why would you take a bond that gives you 0% or nothing? And I just don't get it.
It's a dumb move. It's a dumb move.
I mean, I have no clue why they do that, and I don't get an answer. And people don't feel that if they put the money at risk and they cannot give you an answer, then maybe you should think about it twice.
Yeah, I mean, you'd be better off just with cash paying 0%. At least you'd have access to your cash and it wouldn't be tied up in a bond, right?
Yeah, but it's based on maybe bonds go to minus 50 points and then I make a profit on the bond.
Yeah. If you can sell them. Right. And then but you're saying, well, then why don't you just buy gold? Because it won't go to minus nothing.
Right, but gold, you really need timing because they're very sophisticated, the metal traders, and they always get you on the wrong side of the market. As you remember, I cut a couple before the heist, then everybody started buying gold and silver, and the media were very positive. Now you don't hear them about gold until it goes up again, and then everybody says, "Oh, let me buy some gold," and then it's over again. So you really have to time these markets.
And what about just buying physical metal? I mean, I know you trade and you're a trader and you're an excellent guy, timing market cycle guy. You're really good at it, obviously. What about for the people go out and buy yourself a silver coin every week or every 2 weeks. Just buy it and hold it and don't worry about it. Is that?
I don't know how much the premium is. So I don't know if you pay too much for it. I'm not familiar with that.
But would you own physical metal in your portfolio? Would you tell people to do that?
Well, I tell people who do that, I have big institutions, it's very difficult. The COMEX seems to have problems delivering gold, and to get the gold in the right place and the taxes on it, it's not worth it.
So you wouldn't be a physical holder of gold?
Well, I would like to, but it's very expensive.
What happens if you bought it at at 10.5? What if you bought it in the last low? Is it $1,500?
Yeah, but to get it to the place where you want to store it, and the taxes and all the paperwork, it's a big deal.
Oh, you're talking about institutional investors, though. You're talking about bar guys.
That's what they tell me.
Well,
I'm not an expert in this.
What about somebody who's just holding some coins? Is what I'm asking. Little people, small people that.
If you don't buy a big premium on it, if you don't pay a big premium, I don't know how much a premium is over the gold price.
Got it. Just don't overpay for it if you buy physical.
Yeah.
But you think
you have to calculate why the gold price at that moment and see how much to put on top of it and then see if it's worth it.
And you still think, though, over the next couple of years, at least $2,500 gold.
Right. We have that already for 10 years, the target.
And when will that change? Will you adjust that a price at any time in the next year or so? Is that up for adjustment, up or down?
No, usually it's not. But if you follow me, it's possible. But usually it's the longer the outlook is, the less chance that it changes. Because as we once explained, something goes up with a certain momentum, and like you shoot a bullet up, you can calculate how high it goes. And if the gold price goes up with a certain momentum, you can calculate how high it goes. It's a mathematical situation, a formula that a computer calculates, and usually it's correct.
And you're right now, you think the top on gold is 2,500?
Right.
Wow. Some people are saying it's going to go much higher because of all the money printing and all that. And you say, yeah, not your work. You're not saying it could go.
Well, what I'm saying is, if it gets to 2,500, it could be that the computer calculates a higher price target. And we still have a couple of years to go. So I would say if we would live in half a year, there's a good chance that we get higher. If we get there only 2 years, then I would say, well, the chances are less.
I got it. Let's talk about your war cycles, because a lot of people don't realize, or they buy your service for market timing and cycle work there, but you also have a big war cycle timing. And this question's just jumping out at me when people were asking you to come on. I thought, I want to ask about this peace deal. I also think if the peace deal is going to be good, Trump has to be in office. Nobody's going to sign on if he's a lame duck president. So. But they got, UAE and Bahrain have signed on to this peace deal with Israel, and they think many more people are going to come on and sign on. Do you?
But that doesn't change the war situation with Iran, because they're all lining up against Iran.
So you think this plays into your war cycle? Tell me what you think about this whole deal.
Well, let me compare it to the stock market. If the stock market makes a top, then usually one stock after the other goes down until the whole index goes down. If the war cycle says I'm going to have a big war soon, then you see small wars starting all over. And we talked about the social unrest cycle in the United States. It's all coming out. You see what happens in White Russia. And you see now Armenia. There's everywhere. It's explosive. And so that's like stock by stock going down until you have a big one. And I don't know where something is cooking. You remember years ago, I said the problem is going to be because of the Chinese islands in the sea, and I still think there's a big problem going on over there.
It's still a problem, just like you had said. And that was before everybody was like, what, China? We're going to have, no, it's Russia. And you were like, nope, it's China.
Yeah.
And China's
it's going to be China.
Still a big problem.
Yeah, and I think if there would ever be a conflict, I don't want to be too pessimistic, but I don't think the United States has a chance against China.
Really?
No.
Why?
Because we're democracy. The United States is a democracy, and until they make a decision, it's too late. Look what happened at Pearl Harbor. Look what always happened at too late. In China, it's like they don't change the leadership, so they can have a long-term plan, and they can plan, and they prepare themselves in advance. The United States only runs after the facts.
So, do you think there's a war cycle coming for China soon?
No, there's a war cycle in the world. I don't know where it's coming from.
I mean, do you think China and the U.S. could go to war soon?
It's hard to say. What would happen if China tries to take over Taiwan? What will happen? I know as much as you. Because if the United States wouldn't do anything, then, the whole picture in the world changes.
And this peace deal in the Middle East, you don't think much of it? There's some more people signing on. Do you think that's anything significant, or where does that play in the peace deal that just happened?
Well, for Israel, it's very positive, but it all is under the pressure of Iran, because they're all afraid for Iran. So they're going to make a pact to resist Iran. And the more Iran feels itself in a corner, the more dangerous it gets.
Very good point. So you don't think the peace deal is for peace? You don't think it's going to help peace?
Well, short term, it's for peace. It's peace between Israel and Arab countries, but there's a price to be paid. It doesn't change much because Saudi Arabia is afraid to stand up against Iran and maybe Iraq by itself. And now they have some companions. So the situation stays the same, but it doesn't look better now because they make an agreement with Israel.
And the next war cycle, you said that we have to have a war cycle, World War I and World War II. We're really the continuation of the same war because it's the same thing. You said that, every second decade in the 20s, in 1920, we had, 1917, 18, 19. I was at World War One, and World War Two was 40, 41. Right?
Napoleon and everything.
Okay,
Yeah.
so what about this one? Explain the war
It's
cycle.
about time. If we get through this next 3-4 years without a major explosion, then we're safe. But this is a very dangerous period. Another reason why the Dow can go to 5,000. Like I said, I don't know what's going to do it. Something's going to do it.
And that's just you can't change that 5,000. People laugh and snicker and wow, we're 27,000 or Dow or whatever, and you're like, you can laugh all you want.
Well, in 2007, we calculated in 2006 the Dow was 10,000. And you can see that if you go to my website, I was on CNBC in 2006, I think, and that was 10,000. I said it's going to go to 14,300, and it's going to collapse. And then on the 27th of 2007, I was on, and I was exactly at 14,300. Now that's 43%. So don't tell me I knew what the economy would going to do. So the only conclusion I can make is economy doesn't have to do much with it. And then the whole thing collapsed. They asked me, can it go higher than that? I says, no, everybody out of the market. You can just play it. It's 5 minutes. And then in March 2009, we went totally long again. So it works pretty well. And it's always like that. Years after that, people say, well, it's right. But in the meantime, they lose their shirt.
And if you're in the market right now, you've gotten all your money back. You had this big 38, 40% decline, and you just wanted to play it totally safe. Would you tell people to get out of the market now and not trade it?
What we have is we have leaps. Leaps are long-term calls. Uh-huh. I say you buy calls that at least go out a year or 2 years, and that's so have a limited risk on these situations, and that's all we have.
In the past, now in January, I told my clients to get out of the market, but you're not doing that now. They're not.
Well, we're out of the market. You can take 5% what you have, buy long-term leaps. If the market goes up, you make the same money if that you have 50% invested, but you sleep well because you have 2 years. So the premium doesn't run out so much, and you have very low risk. It's just if you want, because a lot of people are, I sometimes get emails, I lost money. And it says, then where did you exactly lose money? Well, I could have made money, but people see that as I lost money. So it's very hard for people not to participate. So it says no stocks. Then buy some long-term calls on the things we gave them, the stocks we gave them, and your risk is very limited. And if it still goes up a couple of 100 points, then you make a profit.
And you'd be more inclined to be invested in gold, silver, mining stocks. Would it be energy? Would energy be in there with this deflation coming? No, not energy.
No energy yet. But again, before I answer, I really like people to look at my research. They can take for free. They can have it, I think, 4 weeks. I see how we do it, because I don't want to be there and they says I bought because Nena said to buy. Well, on the research it says only buy in 2 weeks, which is not the case, but something like that happens.
Right.
Because I don't do really timing when we talk together.
Right. You're talking about people. So you think? Let me just make sure I get this right. So right now you see deflation, people losing their jobs, second wave of economic wave at the very least of people not paying their rents, bonds going bad, people losing their jobs. That's what you see. That's the cycle you see now. And how long is that cycle going to go for? The deflationary cycle.
Well, it can take several years. I think we'll get the same situation as in Japan. As you remember, in Japan, that the market topped in 1980, and then for 10, 20 years, it didn't do anything anymore because there was deflation. The population was very old, and there's not much you can do. So I don't know exactly what can be done. I mean, out of ideas. How low can interest rates go? How many packages can they issue? How many checks can they issue to help people?
And then when do you see inflation then after that? I just want to.
Yeah, because then the cycle bottoms and then you get inflation. I'm not against inflation, but you just have to time it when it happens.
So for the next few years, deflation, and oddly enough, gold goes up in the next couple of years.
Right.
Because it goes up more in deflation than inflation.
Right.
According to you.
Yeah.
All right.
No, according to history.
Nope.
You can look it up. If you have a chart of a couple of 100 years, you see when there was a bull market, You know, deflation is the normal situation which we don't remember because there was a, you know, our age. What we remember is inflation. But for hundreds of years, deflation was the norm.
Huh. Charles Nenner, I could talk to you for a long time, but your research is on charlesnenner.com, I believe is your website. We'll put links up. You say you get a month's free if you sign up. We'll put up your sign up page. Thank you for coming on. A lot of people have been asking for you to see where you think we are. It's shocking, some of the things you say about, well, the peace deal, that's the corners Iran. That's going to be, that short term, yeah, sure, yeah, but not, no, corner, Iran feels cornered. It's going to, and that's a corner in an animal is dangerous, right?
Yeah, so, but again, I want to mention that if I say something, it doesn't mean tomorrow it's going to happen, because that's what the research is for. We just talk about the big picture.
That's right. I understand. You're telling people not to trade off this interview. Buy the research. Right. Don't trade off the interview. This is long-term stuff. Right. Okay. All right.
Ideas.
All right. All right. Now, Charles Nenner, thank you for joining us today on USAWatchdog.com. Always very interesting and very cool to have you on. And thanks for coming on. Appreciate it.
You're welcome. See you soon.